Welcome to Canadian Credit Card Finder. Today, we're taking a close look at a card designed for Canadians who want to save on interest costs rather than chase travel points, the Scotiabank Value Visa Card. This card is a heavy hitter in the low-interest category, featuring a standard rate of 12.99% on purchases, cash advances, and balance transfers. Right now, you can get a total first-year value of up to $89. This value is a combination of an introductory interest rate on balance transfers and a waiver on the $29 annual fee for the first year. If you're carrying a balance on a higher interest card, this could be the exact tool you need to get ahead of your debt. Let's break down that first-year value of up to $89. It's important to clarify that this figure isn't a cashback bonus. Instead, it represents the total value of the $29 annual fee waiver plus the estimated interest savings from the introductory offer. For the first 9 months, you'll benefit from a 0.99% introductory interest rate on balance transfers. To qualify, you must not have been a primary or secondary Scotiabank cardholder in the last 2 years. Also, keep in mind that a 2% balance transfer fee applies to the amount you move over, so you'll want to factor that into your repayment plan. The standout feature here is the interest rate. While most Canadian credit cards charge around 20%, the Scotiabank Value Visa sits much lower at 12.99% for purchases, cash advances, and balance transfers. This makes it an excellent choice for consolidating higher interest debt to save on those monthly carrying costs. Beyond the interest savings, you'll also get some practical perks, like being accepted at over 28 million locations worldwide and receiving up to a 25% discount at participating Avis and budget car rental locations across Canada and the US. Now, it's important to manage expectations when it comes to rewards. This card does not offer any points, miles, or cash back on your daily spending. In the world of Canadian credit cards, you usually have to choose between a low interest rate or a robust rewards program. Scotiabank has designed this card specifically as a financial management tool. If your primary goal is to pay down debt or minimize interest charges, the savings you'll find here will likely far outweigh the value of earning a few points on a card with a much higher interest rate. When it comes to insurance, the Scotiabank Value Visa is a very basic card. Unlike premium travel or rewards cards, it doesn't include standard features like purchase security or extended warranty protection. This is part of how the bank keeps the annual fee so low. If insurance coverage for your shopping or travel is a priority for you, you might want to look at other Scotiabank offerings, but for those focusing strictly on interest savings, this omission is often a trade-off worth making to keep costs down. So, who can apply? Scotiabank has made this card quite accessible. You'll need to be a Canadian citizen or permanent resident and have reached the age of majority in your province or territory. The income requirements are very inclusive, requiring a minimum personal or household income of just $12,000. For your credit score, you'll generally want to be in the fair to good range, typically between 660 and 724. Just a heads up, if you've declared bankruptcy in the last 7 years, you won't be eligible for this specific card. Is this the right fit for your wallet? It's a great choice if you tend to carry a balance from month to month and want to stop losing so much money to high interest. It's also a powerful ally if you're looking to pay down high interest debt from other cards through a balance transfer. However, if you're the type of person who pays your balance in full every single month, this isn't the card for you. You'd be much better off with a rewards or cashback card where you can actually earn something on your spending without worrying about the interest rate. Let's weigh the pros and cons. On the plus side, 12.99% is one of the lowest standard interest rates available in Canada. The low annual fee is also a plus, and that introductory balance transfer offer can provide significant debt repayment savings. On the downside, you aren't earning any rewards, and you miss out on common insurance benefits. Also, keep in mind that while the fee is waived the first year, you will be charged that $29 annually starting in year 2, whereas some other low-interest cards on the market are strictly no fee. It's always smart to shop around before you commit. If you're considering the Scotiabank Value Visa, you might also want to look at the MBNA TrueLine MasterCard. It offers a similarly low interest rate and frequently features 0% introductory balance transfer offers. Another solid option is the BMO Preferred Rate MasterCard, which provides a low interest rate for a similar annual fee. Each of these cards has slightly different terms, so it's worth comparing them to see which one aligns best with your specific financial goals. Our final verdict. The Scotiabank Value Visa is a specialized tool. Because its 12.99% rate is significantly lower than the industry standard of 19.99% or higher, it's a fantastic option for debt management. It's about saving money, not spending it to get points. If you found this review helpful, please give us a like and subscribe to Canadian Credit Card Finder for more deep dives into the best financial tools for Canadians. Have questions about balance transfers? Drop a comment below and let's start a conversation.